South Africa, like most other countries, is dependent on the collection of taxes to be able to essentially run the country. Now, there are a variety of taxes. The focus of this video is normal tax or tax on income, and this tax process or this tax collection can be linked to what is known as the life cycle of a taxpayer, which I'll explain in a bit more detail later. But before being able to understand the different elements of the life cycle of a taxpayer for normal tax, there's a few core concepts that we first have to look at. The first concept is that of person. The Income Tax Act defines a person, and it includes a natural person, which is a living, breathing human being like you, if you are listening to this video. But it also includes corporates like your companies and your close corporations. It includes entities like trusts, as well as the deceased or insolvent estates of a natural person. Quite interesting, a partnership is not a person for normal tax purposes, while for VAT purposes, in terms of VAT legislation, it is considered to be a person. But for normal tax, which is the focus of this video, a partnership is not a person. Each individual partner will be seen as the person for tax purposes. Natural person, like I said, that's your living, breathing human being. Another core concept that is quite important in our tax process or our normal tax process in South Africa is that of resident. Now, a natural person can either be ordinarily resident in South Africa or they can be physically present, while a non-natural person like a company will be a resident for South African tax purposes if that company is either incorporated, established or formed in South Africa, or the second test, if the entity is effectively managed in South Africa. Now, why is this resident definition so important to us? Because if you are classified as a resident for South African tax purposes, you are taxed on your worldwide income, irrespective of where it comes from. And citizenship has no influence on residency for tax purposes. And you will go into that detail when you look at the definition of resident. But you can have a Nigerian citizen who, because that he or she complies with the Income Tax Act requirements, will be regarded as a resident of South Africa for tax purposes. A non-resident, so any person that's not a resident is defined, we refer to as a non-resident, and those persons are only taxed in South Africa from on income from a South African source. So you can see that this definition is one of the foundations for how normal tax is levied and collected in South Africa. Another important definition is known as the year of assessment. Now, what this means is if we look at normal tax, and you will still, if you haven't done so already, you will still delve into, what normal tax is and how it is calculated, the framework that we use, etc., etc. But normal tax is calculated on an annual basis. In other words, over 12 months. So, in those 12 months is what is known as the year of assessment. Now, different persons have different years of assessment. For example, a natural person and a trust, the year of assessment for them always runs from the 1st of March to the 28th of February. So, for example, if you look at the 2020 year of assessment, the start date for a natural person of that year of assessment will be the 1st of March 2019, and it will end on the last day of February of 2020. So in this instance, because 2020 is a leap year, the 29th of February. A company or a corporate entity, or a CC for example, works differently because they work according to the financial year of that particular company or CC. So for example, if a company's financial year runs from the 1st of January to the 31st of December, then that will also be the year of assessment for normal tax purposes for that particular company. Our second last definition is that of return. Now, what is a return? If you look at the definition in the Tax Administration Act, it is a form, declaration, document, or other manner of submitting information to SARS. Now, for normal tax purposes, for natural persons, the normal tax return is known as an ITR 12, and for companies, the normal tax return is known as the IT 14. Our final concept is that of assessment, and you will hear quite a bit about assessments as you go through your tax studies. But an assessment is simply the determination of the amount of either a tax liability, i.e., what you owe to SARS, or a tax refund where applicable. In other words, what SARS might owe to you. In the case of normal tax, the assessment is done by SARS. And I'll show you on the life cycle of the taxpayer how that works. A tax like VAT, for example, has self-assessment. Now, what that means is it's not SARS or the Revenue Authority that determines what the amount owing to SARS or owing from SARS is. It is the taxpayer. But you'll delve into that when you do that. So let's look at the life cycle of a taxpayer. It starts off with registration. You need to register as a taxpayer at SARS. And if you go to SARS's website, www.sars.gov.za, you will get all the information you need to be able to register as a taxpayer. Now, for natural persons, this of course means you in your own name, go and register. But for companies and other corporate entities, they will usually have a representative taxpayer that will register on behalf of the company as a taxpayer. And you can have a look at the document. There's all the information that SARS will need from you if you want to go and register as a taxpayer, which at some point in time, if you stay in South Africa, you probably will have to do. The second step in this life cycle or tax process essentially is that of information gathering and the submission of returns. So after you've registered as a taxpayer and you get your tax reference number, your income tax reference number, what you'll usually do is you'll go and register on e-filing, sarsEfiling.co.za, which is an online platform free of charge that is provided to taxpayers for the submission of tax returns, including normal tax. And it also gives you the option to make tax payments, to query the assessments that are done by SARS. So there's a whole host of things that happens on e-filing. So the tax season in South Africa usually runs from July to November. Now what this means is once your year of assessment ends, so for a natural person, the year of assessment runs from the 1st of March to the 28th of Feb. Once that year of assessment ends, taxpayers usually have from July to November, but if you're a provisional taxpayer, it's usually extended to January. You have the opportunity, and not just the opportunity, it's compulsory, you have to comply, you have to submit a tax return, and so during that time, you will gather all your information, all your bank statements, all your proof of income. There's a whole host of documents like an IRP5, which is given to you by an employer, that is a summary of all the income that you got from your employer and all the deductions that they made. An IT3, for example, that shows you if you have investments and you received interest from that investment. If you belong to a medical aid, the medical aid will also give you a tax certificate to show this is the total amount of contributions you made. And whatever your personal circumstances are, you will collect all the information necessary to complete your return. You will then complete that return on e-filing, and like I said when we looked at the core concepts, for a natural person that is known as the ITR 12, and you will then submit that information to SARS. Once you've submitted that information to SARS, we move over to step 3 of the life cycle, which is the assessment of the tax liability or a tax refund where applicable. So SARS, from a normal tax perspective, on their side, they have systems and controls and measures in place to look at the calculations and to tell you, listen, yes, we agree, this is what you owe us, or this is what we owe you. Or they might come back and say, nope, we don't agree, you did not declare income, for example, or you tried to claim a deduction that you were not allowed to claim. And that then brings us to step 4 of the life cycle, which is dispute resolution. So if you don't agree with SARS's assessment, you have the right to dispute, and there's a whole process that you follow to lodge an objection, and then you can appeal, and there's different stages that you go through. You start off on e-filing, but it can ultimately end up in the courts, so High Court or even the Supreme Court of South Africa. Number 5 in the life cycle is recovery of tax, because whether or not you agree with SARS, and that is a whole different process which within the dispute resolution step, but SARS's main role is to collect taxes. So even if you object to an assessment, even if you don't agree with SARS, that objection does not suspend your obligation to pay tax. And this is known, and you'll learn about that later in your tax studies. This is known as the pay now, argue later rule. You can only be suspended of that obligation upon application to SARS. But remember, that's their main role. They have to collect taxes because that money is needed to run the country. The final part of the tax process in South Africa is penalties and fines. And ladies and gentlemen, SARS does not play games when it comes to penalties and fines. So if you fail to submit an income tax return, if you fail to pay the correct amount of tax outstanding, or if there's any other non-compliance on the part of the taxpayer, it could result in penalties being levied by SARS. And together with those penalties, you of course will have interest. So in the document that was handed out to you, there's a diagram that you can just skim through. That is the penalty or the penalty regime in South Africa, or a summary of the penalty regime. When you go on to advanced tax, you will learn a lot more about some of those penalties that taxpayers can face. And that then concludes the video on the tax process in South Africa. Keep in mind that this is an introductory video. It is not supposed to give you, detailed information about the tax process. You will get to grips with that as you go through your tax studies. Happy studying!